Good evening, everyone. Welcome to Thursday night.
Welcome. Another Thursday night sesh with your friends, Tex and Ads. As always, if you do like the content that we're producing, please like, subscribe, or comment. We do this because we love to do it. So if you have any coins you want to chart, things you want to look at, we'll be looking at this month's theme very shortly for our educational session, which we'll be doing in the next couple of weeks, as we promised. So obviously, if everything that we use and all of our tools and steamrollers and unimokus and unicons and all the custom indicators that we have, obviously over at unimoku.com, no, not that one, unitytradinggroup.com, you can come over and have a look at all of our guides and indicators and the whole gamut over there. In the meantime, let's get into Bitcoin Ads. What is going on here? Not unexpected. We did say that 12.1 would be a potentially impulsive move, and that was the place where we'd be looking for shorts, and here we are again.
Absolutely, bro. Look, on I think it was yesterday, I did just a quick live session in the morning just to really describe what I thought about BTC and where I thought it was going to end up over the next day or so. Excuse me. We spoke about, I really made it clear that we spoke about 12,000 on our Tuesday night session, where we were seeing, this fib level. I've drawn the fib levels in there, just extended them across a little bit. However, this 12,000 level, the 12K for BTC, was going to be that psychological resistance level for this, and on top of that, using this trend line, that we made while we were ascending towards this supply at 12.3, also was another form of resistance there that we were using to determine if that was going to be like a bearish retest of that trend. And if you flick it to the line, you can easily draw that trend in. You can easily draw that trend in all the way up quite easily for the two latest touches as well. So if you want to use line chart just to draw your trend lines in to get a better understanding of where they should be, that's what you should be doing. However, that 12K level didn't hold. I did really say that we were going to head down maybe towards that 50, 61, even the 38.2 Fibonacci retrace. Obviously, it well exceeded my expectation for that pullback, and we find ourselves back at the level of demand. With this level of demand, two things, or a few things. First thing that I want to say is it is low quality, okay? It is the middle of a trend, coming up off the one at the bottom. So it is low quality. The second thing is we've pushed through this a number of times, and we've eaten this away so much. You can only try and bend a stick so far before it will snap. So in the immediate short term, I think 11K's on the cards, to be honest. For what I've been looking at BTC, over the course of today, I know we've respected this demand again significantly today. However, I don't think there's enough steam left in the tank to really push us up higher, back towards this 12K level. I do think that we'll probably see 11K finally, and we'll make our decision on the overall market there, Ty.
Yeah, totally agree with that. 12K is the new 10K, as we said on Tuesday. So that was going to be a very significant level, really looking left and looking towards the 17th of August and that move up towards that 12.3, 12.4. That's the anomaly of this range, because that range is still very consistent from 12 down to 11.2. So I was short from 11.9. Unfortunately, I cut my short. I cut it a little bit too early. I cut it at around 11.38. 11.388 was where I cut my short. So I wicked down a little bit further. Not unusual to see those sort of quick sporadic wicks down. We see it time and time again. We explained this on Tuesday where we saw that W bottom, that double bottom wick. That we drew out, and we showed a couple of examples. I'm not going to flog a dead horse. I say this every single week. So this is not unexpected, and really looking for where we are now. There's still, looking above us, there's still quite a bit of resistance within this area for another move up. So looking at where we are, and I highlighted this inside Discord today, we had a rejection off the Kumo. This is on the crypto settings on the 4-hour. We rejected off the Kumo at that 11.432, and we seem to be struggling a little bit at this point to get up higher. Yes, we had some green candles there and some nice reactions off that 11.2, but I think that was really just absorbing the demand down there. If we were to creep back up, I really see 11.5 as the struggle to get past, maybe 11.6 perhaps. But to me, that seems like a pretty decent level to potentially be looking at more short. So even if we did retrace into the cloud there and that level that ads has got highlighted, let's say, for example, we get to 11.594, that seems like a pretty good level for a rejection. And then from there, I would want to try and see if there was going to be any sort of bullish rally, would be a retest at the bottom of that Kumo, and then a move back towards the upside for a nice edge-to-edge trade. But right now, looking at the 61.8, the Kumo, and even the MAs above that on using Unicorn and our MA fan, there's some pretty decent resistance there. So we might linger around here as we have in the past, but looking left, we've rejected from this point here on the 27th of August. We rejected from there and made that first double bottom. So I wouldn't be surprised to see this same sort of action play out. Yes, we made a higher high there where we had that bearish retest of that overall trend line. We're yet to make a significant lower low below that 100 fib mark at that 11.112. I want to see the reaction and how things play out at around 11.2. For those of you playing along at home, 11.2, 11.75, and then 10.844 are the levels that I'm looking at are these major levels locally. And when I say major, I mean for these short-term plays that I'm in. I was only in one trade over the last 2 weeks, and that was that short from the 11.9 mark. So I was happy with that, and that's also a lesson in patience too. Like if you're away from the charts or you're busy with other things personally, like myself, let the trade come to you. I wasn't expecting any big move past at least, and I had further shorts laid in from 11.1, 12.1 and 12.2 as well to sort of catch those impulse weeks. So everything that Ads has said there, I totally agree with. Moving down for me, my 27 extension lies at 11.75, like I said, and then 10.844, 10.5 is my next level from down there, and then I've obviously got all my scam wick buys all the way down to 8.865 is where I've got my buys layered down to. So still just playing the range. Things are not out of the ordinary here. This short was beautiful. This was a great trade opportunity for myself. I was really happy with that. And now I'm out, and I'm just waiting for confirmation again. Pulling back on my amount of trades, looking for higher quality trades rather than volume of trades, has really been a nice little strategy for me lately. A lot less stress, a lot less time in front of the screens, and I'm patient. I'm just setting my alerts in the background, and when we get to that level, I look at it, I set a buy or I set a sell, and I set my targets and I walk away. And if they hit, they hit. If they don't, I get stopped out. Happy days. So it's a very stress-free trading environment for those who might be busy like I am with work at the moment. So, yep, agreeing with ads. Ads, anything else to say? If not, let's get into, maybe let's have a look at the BTC dominance.
Absolutely. One more thing before we move on from BTC, though. I want to get your opinion, bro, of this sort of formation that I've been seeing around town a little bit. Would be that head and shoulders on the daily. Not so much on the 4-hour time frame, not so much on the lower time frames, on the higher time frames. And I'd like everyone's opinion on this as well. If you can throw your opinions in the chat about the validity of this. I see it there on the daily time frame. However, it's a little bit, too near here, nor here nor there. A little bit to and from on this one.
Yeah, I think it's a little bit ambiguous, that formation. It's not quite something to ignore, but it's probably not something to put a ton of weight on. But the validity, looking at it, and I know you highlighted this personally between you and I a little while ago as well. I can't remember if you had posted it in Discord. If you thought it, you probably did. But yeah, I agree with this, and then that also then concurs sort of with this corrective structure. Which might be the start or the end point of a distribution after that previous run up. So if we do have that head and shoulders, yeah, that 10.8 level looks likely. And if we do get to 10.8, that is where I'll pay a lot of attention to Bitcoin, because looking left and from that 10.8 level and that structure, if we do break below that midterm demand there at 10.8, it's a pretty significant drop back down towards that 10.2 zone and that 10K sort of level. There's not a whole bunch holding that up.
Yeah.
If we did break down from there, then yeah, definitely 10.2, 10.3 is where I would be aggressively placing some bids, let's just say that.
I do agree with the premise that you probably shouldn't put a whole lot of weight on something like this being, a little bit obscure in the way it's been drawn, but I can't ignore.
But I like that.
Yeah,
I like that. I think it's cool when you notice things like that to pay attention. Pop it in your trade journal, and if it doesn't play out, it doesn't play out. But the fact that you can recognize it without other people sort of saying it or indulging you in it, I think is a credit to the fact that you're seeing these formations time and time again, like me with my W's or my M's, and you pay attention to that sort of shit. And had you have put a lot of weight on that, you would have been absolutely correct, because we had that rejection off 12K. So
absolutely.
Yeah, I like playing around with stuff like that, because it's interesting to see how it plays out and if you were right or not.
Yeah, exactly. All right, we'll have a look at the dominance chart now. What the hell is going on here? Hold on a second. Pretty sure that's a glitch. Anyway, we'll have a look at the daily. It's not there on the daily, so we'll have a look at that. Still walking towards that lower 58% level on the BTC dominance chart. I'll flick the title over for all you guys to have a look at as well. However, it's getting quite low, quite oversold. I know that the dominance chart doesn't get oversold, but in terms of the way the TA looks, it's quite oversold. It's getting towards that lower portion of the run, I think, on the dominance chart, and BTC does need a little bit of a push or a move to the upside. Look, I could be completely wrong on that, and we could just continue down towards that 58 demand, which I think is probably the safest option, seeing that that demand is drawn on a significant market pivot point, between 58 and 57.5%. On the dominance chart. So nothing out of the ordinary for the dominance chart for the last couple weeks. If I draw the line chart and just adjust that trend line, if you want to use your trend lines, make sure you have a look at the line chart to give you less of an objective way to draw it. But we're still moving down towards that zone. No higher highs, continually making lower lows. So that market structure hasn't changed at all.
No, definitely not. And as I said on Tuesday, and you and I pretty much totally in agreement with that. You can see the respect of that 61 extension, and for me it was 58.68. So it was just a touch higher than my overall prediction. Listen, I'll show you this, and it's super rough, and I'm proud to say that I'm definitely not an Elliott wave aficionado, and this sort of I'll send this to you, ads, and this sort of plays in with why I like to fuck around. I know I'm wrong. I know this is wrong, and I don't claim to be an Elliott Wave expert, but this is why drawing things like your head and shoulders chart or other things that you have a play with on your screen is fun to indulge in, because sometimes you're right and sometimes you are absolutely wrong. And in this case, I was very, very close, and I drew that on the 18th of August. And while we didn't get a pop up to that D, I think maybe we did hit that 61.8 level at some point, as I don't quite know. But yeah, that was sort of what I was playing off in, and we had a little bit of a moment where it didn't quite work out around that 61 extension there, that 61 fib level, but it worked out, and that's pretty much where I'm at. So I would hope that we see some sort of relief from here for BTC, but that doesn't really agree with my prediction that if that 11.2 doesn't hold, then we're in trouble.
Yeah.
So yeah, like I said, I'm not embarrassed to share that. I know it's wrong. But when you look at the overall sort of structure and the play, it worked out. So I was just off, but no, happy to see where this goes. But yeah, anyway, so looking at this downtrend line and where ads has got, clearly that 27 extension, and as you know, the way that we talk about it, when we hit those 61.8 extensions, particularly with Fibonacci, they often tend to be respected pretty heavily as levels of support, where we'll either consolidate or we'll bounce back up and have that sort of magnet effect up towards that 27 extension level there. So if and when we get to that 27 extension, I would expect some sort of rejection from that, and then maybe a double bottom sort of retest of that demand zone, where I'd look to make a decision there, because, well, yeah, that's right, and we would potentially make maybe a W sort of formation there. Yeah, there we go. And then we would wait for a breakout of that. So that would maybe be in line with the fact that BTC might have a little bit of relief here before another move to the downside. Yeah, I don't pay massive amounts of attention to the BTC dominance chart. I usually let the BTC chart do the talking for me. But yeah, there's no denying that that you should start paying attention around this level, in my opinion.
Yeah, absolutely. I think so.
Yeah.
Definitely.
All right, FUSD, let's do it.
FUSD powering through this in the same sort of boat as BTC at the moment, and I will move that across. Oops, hang on. Let's move that up. I mentioned today that we actually created a very significant pivot point on the 4-hour time frame on Ethereum at $480 or $475, $480. So that's going to be quite interesting to see this play out if we do come back and test this level again, because there is a significant amount of liquidity at this point to push us out of that level and back down to 432. So if we come back up to that supply, it's going to be very interesting. But in obviously the meantime, I do think Ethereum isn't finished in terms of this movement to the downside, and more than likely we'll probably see the 61 be tested again. I wouldn't think too far ahead, beyond that really. If I draw the vertical line in, you can see some of the liquidity on the left hand side that's going to be respected. With alongside that 61, we've got a lot of price action around that level there. So that's where I'm really thinking for ETH in the short term, mid term, is $420, $415. Pending that, there is a significant demand zone down the bottom, which we've bounced off a number of times at 370, but that's a little bit of a stretch right now looking at Ethereum. So that 61 might satisfy these indicators a little bit further, mainly looking at that CCI. But if I had to say that overall market swing for ETH, if I had to draw that level of demand in, it would really be at that $405 or $400 level. So we might see that, in the midterm instead of the short term. But we'll have to see what tonight brings.
Yep. Agree with that. 485.55 is where we said, that was one of my major levels that I highlighted this week, and we were very, very close to that 490 or something. Just looking at the Bitfinex chart, by the way. So looking at where we are now, we've got this C-clamp formation on the 4-hour on the crypto settings. A little bit of local support at 430. If we do break down from there, yep, I agree with that. It's totally 420 and 414. and then down towards 398.22, which was really the start of this range between let's say 400 and 485. So that would make sense to sort of revisit that particular level now that we've broken down below that 440 level. So that's kind of my plan of attack at the moment. And then from that 398 level, I will likely start layering in some spot buys again, as I did before, all the way down to 350 is where I place things. I've sort of got 398.22, 370.55, 354, 332, 320, where I have some buys set.
Yeah, it's about those levels that you've just described, even just in the immediate term, that 414 and that 398 really lines up with the two areas of interest that I had at 316 and that demand also at around that $405-$400 level. So that works out quite nicely.
Yeah, totally. And we've had these levels drawn in for weeks and weeks and weeks, and nothing is really changing. It's refreshing that the TA is being respected so well on these two major coins. So nothing really changes. This is, I think we'll continue saying the same thing for a couple of weeks to come yet, Ads.
Absolutely, I think so.
Cool. All right. Alts, I'm not even looking at alts at the moment, so I'm not even going to say anything. Sushi, slushy, hot dog, tacos, sandwiches, ham sangers, spag bog, whatever the fuck they're called these days. I do not give two shits about it. I'm not even paying attention, so I'm not even going to talk about it. All right, let's, to put it bluntly, fuck that. All right, let's get into the DXY, brother. What's happening? This is regulated markets. This is not financial advice. We don't claim to be financial gurus. Anything we say is educational only. Do your own TA. Don't follow two fucking wackos on the internet.
Come on, man. Give us more credit than that.
All right, don't follow one fucking wacko and a guy who knows what he's talking about.
Quick one. I just want to answer one question that I just see pop up in the chat. Do you guys look at Forex and how your indicators for Forex compared to crypto? Our indicators are fantastic across all markets, but however, if we're looking at regulated stuff, because the data is so precise and we've got better swings to work with, Daniel, the indicators work better. You're going to have more, much nicer structure to work with than you are with crypto. And the stuff like Steamroller, it's a no-brainer. It works even better than it does on crypto. So all markets, however, stuff that trends not very nicely, it'll work even better.
Yeah, and funnily enough, when we first made Unicon, which is our first major indicator that we made, we were making it for the intention of trading it on Forex.
Yeah.
So that was sort of the major premise on Forex to begin with. And then it sort of adapted around towards crypto, and then we found a pretty healthy medium between the two. So looking at super trend exit there, not the bright green and red super trend exit, it clearly works quite well on Forex, as you can sort of see. And then you add additional layers to that, like your MA cross, and then Steamroller, which you can see is, Steamroller speaks for itself. So we don't need to tout that one. It's a beautiful combination using just those two indicators alone.
Yeah. All right. So getting into what the DXY's done and what we think is going to happen over the next little bit. So as we discussed yesterday morning and Tuesday, we did have that respected 127.2 fib extension after we destroyed this double bottom scenario that we were looking at. I think on Tuesday night as well. So Wednesday, when I did that live in the morning, we discussed this move towards the downside. However, it does line up quite nicely with a level of demand. So that was a good bounce from there. Right now, I'm looking at this like short-term downtrend alongside this 38.2 fib level there. They intersect quite nicely just here at about this 92.97. It did look like we were going to break out, close above, and continue up earlier today. That still might be the case, even with this red candle. We might just wick down, give us that retest that we need to before we need to, retest that level at 93.21. But I'm also waiting for this candle close, which is in 55 minutes. So we'll see what happens there, and we need some more volume to enter this market over the course of tonight. With gold, however, silver. Gold, however, with this one here, let me change the title over for the guys watching later on. Still responding to that DXY. So, we had these fib levels drawn in for quite some time now about this 1980 level with gold, and it is really following quite closely along with the DXY, and really doing not complete opposite, but it's following very closely to the opposite level for the DXY. So moving with that, and honestly, we're sitting right now at this pivot point level of demand, just drawn in there with that candle just there. So that pivot point forms nicely with gold. So if we do start to move up, that might be the premise that that DXY might not even break that trend line and continue down, making that lower high. So that's why I'm saying we need a little bit of volume to come into this tonight when London crosses over New York for that trading session. And silver, I suggest, would probably do exactly the same thing. We've had one retest of this demand level that I can see, and there might be a little bit of downage over the course of this evening, leading up to that New York London timeframe crossover before we see the same thing on silver. Silver doesn't really move exactly the same way as gold and the DXY does. It is a little bit of its own, runs its own race. However, you can get the sort of gist of things, and you can really gauge the trend if you really look at the USD and gold as well. So it'll probably come down a little further, maybe touch that demand a second time, and get off to the races, or even start to retest maybe that 38.2 level, which I can see some decent liquidity moving to the left-hand side. Not too much more to say about the DXY, gold and silver at the moment. It is a nice quick session. We've been on for about half an hour now. So all I wanted to say, Ty, so the only thing I really want to say to you guys is like, subscribe if you can. It really helps the channel, helps us as well. Have a look at some of the Unity Trading Group packs that we've got on our website, unitytradinggroup.com/store. Anything you wanted to add to that, Ty, my man?
We like I said, we do this off our backs, regardless of whether we have memberships to our subscribers or not. We still love to do this, but at the same time, we won't continue to do this, or can't continue to do this, if we don't have support of the people watching, and feedback and comments, and people subscribing, and the obvious desire of people to want us continue doing this, because we both lead exceptionally busy lives, and we do this off our back, as I said, plus the trading and everything else. So if you want us to keep doing this, please support us. Some days it does get quite tough when you see very little reaction, and I'm being very candid here. It can get very frustrating at times when you produce hundreds of hours of content and you see very little engagement. So for you to just like or leave a comment or subscribe and say, hey, this is what we'd love to see, or I disagree with what you're saying on BTC or ETH or something like that, it really does make a big difference to us continuing to do this. So please do support the channel and subscribe, and join us on this. We're all in this to make money trading together, and all support each other, more importantly, throughout all of this and everything that's happening in the world at the moment. So that's all I really want to say, being a little candid there, probably more than what I should. But thank you for watching, if you are watching this at the moment, and your support, and we'll see you on Tuesday night.
I'll see you all Monday for the morning session. Otherwise, we'll see you Tuesday. Catch us then.
Bye.